Last week, the 2021 annual ULI Fall Meeting wrapped up in Chicago, and with that, the highly anticipated 2022 Emerging Trends in Real Estate report was finally released. The Emerging Trends report is put together every year by ULI and PwC and is one of the most well-respected publications in the entire commercial real estate industry. And this isn't just because of the reputation of the companies that put this together, but also because of the caliber of real estate professionals whose thoughts on the market are included each year, with leaders from top companies like Brookfield Asset Management, AEW, Goldman Sachs, Hines, KKR, and a host of other major real estate private equity firms weighing in on the state of the market and where they see things going from here. And although the report is over 100 pages long and has a lot of helpful, relevant information for investors, one of my favorite parts to jump to every single year is the Markets to Watch section, which ranks 80 US metros on a variety of different factors heading into the new year. So to sum up what can sometimes feel like an overwhelming amount of information in this report, in this video, let's walk through the top 5 US real estate markets for 2022 according to ULI and PwC, and why each of these markets was worthy of making the list. So let's start backwards here and go from number 5 to number 1, with number 5 on this list, which is surprisingly the only market in Florida that even cracked the top 10, and that is the Tampa St. Petersburg market. The Tampa St. Petersburg metro is up one spot from coming in at number 6 in last year's report, and this time around, this market led all metros in the report in available development and redevelopment opportunities, and the market also had the highest level of buy recommendations from surveyed investors for retail properties specifically, and ranked number 4 among all markets in the report in buy recommendations for hotels. The ULI and PwC report also included forecasted population growth over the next 5 years, and in the Tampa St. Petersburg metro, this was projected to be 1.0% per year, which might not seem like much, but this is still far in excess of the projected average national figure of just 0.6% annual growth, and this number is actually even higher than neighboring Miami's anticipated expansion, coming in at just 0.9% projected annual growth through 2027. The Tampa St. Petersburg market is unique because, unlike Miami, this metro is still relatively affordable compared to other areas of the country, with home prices as of August of this year hovering right around the national average of $303,000 according to Zillow data, and rent prices coming in at about 2% less than the average US figure. And these factors, coupled with the lack of state income tax and the lack of winters that many transplants from the Northeast and Midwest are looking to escape, the Tampa St. Petersburg metro has become an extremely attractive real estate market heading into 2022. And as you'll see as we continue through this video, low taxes, warmer weather, and business friendliness are themes throughout the entire top 5 list, and number 4 on this list also has these things going for it in a really big way, and that is Austin, Texas. Austin actually dropped a few slots from coming in at number 2 on last year's list, but this market still has a ton of room to run, with the 5-year annual population change forecasted to be 2.0% per year, which is the highest number of any of the 80 markets studied in the report, and this is also a full 70 basis points higher than any other market on this top 5 list. Austin also had the 3rd highest 5-year projected annual employment change in the report at 2.4% per year, trailing only Orlando and Las Vegas, and this market ranked number 1 in local economic prospects and the availability of debt and equity capital, showing not just population and job growth, but also significant investor interest that continues to add fuel to the fire in this market. According to Zillow research data, Austin home values have also exploded since the beginning of 2020, jumping by 30.2% since January of last year, trailing only Boise, Idaho during this time at 32.4%. And while Austin has become largely unaffordable and now ranks as the most expensive market in all of Texas, this city still benefits from no state income tax, a lack of a real winter, and also a massive influx of major companies that have decided to call Austin home. Tesla is one of the most recent additions to this list, officially announcing the move of its headquarters from Palo Alto to Austin earlier this month, and companies like Google, Amazon, Apple, Oracle, and Facebook have all brought a significant number of jobs to the metro over the last few years. And speaking of job growth and home value growth, let's move on to the number 3 metro in this report, which jumped a full 12 spots from its position in the 2021 report and very well might be the hottest market of all cities on this top 5 list, which is Phoenix, Arizona. This is the first time Phoenix has cracked the top 10 list in the ULI PwC report in over a decade, and this metro has been on an absolute tear in the past few years, with home values jumping by 24.3% since January of 2020. Phoenix is also expected to see 1.7% annual job growth over the next 5 years, and again, similar to Austin and Tampa, this market allows its residents to skip the winters, which makes this market a really attractive city for many people looking to leave expensive West Coast markets like San Diego, Los Angeles, San Francisco, or Seattle. And even though home prices in the market have skyrocketed over the last few years, Phoenix is still relatively affordable for would-be homeowners, with the average home priced at $402,000 versus the national average of $303,000. And for renters, Phoenix is actually even more affordable than most other cities across the US, coming in at just $1,702 per month versus the $1,787 per month that renters are paying on average across the entire country. And if you mix these factors with population growth of over 5% over the past 3 years, fast-growing companies like DoorDash, Opendoor, and Carvana all either setting up headquarters or expanding their presence in the metro, and established companies like Wells Fargo, Intel, US Airways, and American Express each employing over 7,500 Phoenix residents, this city has become one of the hottest markets for a young, educated workforce to build a career and raise a family, and has attracted a significant amount of interest from real estate investment and development firms across the entire country. Now, moving back to the East Coast for number 2 on this list, this metro has a lot of the same characteristics that made Phoenix so popular over the past few years, with a low cost of living, low taxes, and extremely strong job growth, and this market is Raleigh Durham. Raleigh Durham actually dropped from the top spot in 2021's Emerging Trends report, but this metro still has incredibly strong prospects heading into the new year, with 1.3% annual population growth expected over the next 5 years and 1.2% annual job growth projected during this time. Raleigh Durham also ranked number 1 in home building prospects in the report, number 2 in both multifamily and retail buy recommendations from all investors surveyed, and number 3 in development and redevelopment opportunities and local economic strength. And what's also interesting about Raleigh Durham is that this is one of the largest markets in the country for one of the hottest real estate product types across the entire US right now, life sciences, and Raleigh Durham is also the home of Research Triangle Park, which is the largest high-tech and medical research park in all of North America. This metro is also one of the most affordable on this top 5 list, with residential rents coming in at almost 16% lower than the national average, and home prices in Raleigh Durham coming in at $364,000, or just $61,000 over the average figure in the US. And with major universities like Duke, UNC Chapel Hill, and NC State consistently churning out an educated workforce in the metro, mild winters for people moving from the Northeast or Midwest, and a low flat state income tax rate, it's easy to see why so many people are moving to the area and why Raleigh Durham has been in the top 2 markets in this report for the past 2 years. And finally, to round out this list, the number 1 market for 2022 real estate prospects is up 2 spots from coming in at number 3 in the 2021 report, and this is Nashville, Tennessee. In this year's report, Nashville ranked number 1 in overall investor demand, number 2 in development and redevelopment opportunities and local economic strength, and number 3 among all markets in the report in availability of debt and equity capital. And similar to Raleigh Durham, home prices in Nashville are just $53,000 higher than the national average, and residential rents in the market are actually 8% lower than the average figure in the US, making this another affordable place to live for young professionals and growing families. And just like Austin and Tampa, Nashville also benefits from no state income tax, which has brought many businesses and individuals to the metro looking for a place that they can keep more of their hard-earned money. For example, Kaiser Aluminum, a $1.3 billion manufacturing company, recently announced it would be moving its headquarters to the Nashville market. Oracle closed on the purchase of over 60 acres of land in the metro for $254 million earlier this year, and the company plans to spend an additional $1.2 billion on the site within the next 5 years, and Mitsubishi Motors moved their U.S. headquarters to the market in 2020, occupying 40,000 square feet in nearby Franklin, Tennessee. And with all of these things playing a role, Nashville is expected to see 1.6% annual employment growth and 1.3% annual population growth over the next 5 years, again creating a significant amount of real estate investment and development opportunities for real estate firms and industry professionals trying to enter the market. Overall, the main pattern among all of these top 5 markets is very, very clear. A lower cost of living, tax friendliness, and warmer climates have all driven job and population growth in these metros, which has led to a huge uptick in demand for all types of real estate in these markets and quickly increasing values as a result. And if you're looking to spot the next Phoenix that might jump 12 spots in the 2023 report, looking for factors like these in any market you're considering can be a great way to get ahead of the rest of the industry right now and spot opportunities before others get in. And if you want to learn more about how to actually analyze and value commercial real estate deals that you might be considering, or if you're just looking to land a job in the industry and you want to get in on the ground floor of a growing market right now, make sure to check out our all-in-one membership training platform, Break Into CRE Academy. A membership to the Academy will give you instant access to over 120 hours of video training on real estate financial modeling and analysis. You'll get access to hundreds of practice Excel interview exam questions, sample acquisition case studies, our entire library of pre-built acquisition, development, and waterfall models for multifamily, office, retail, and industrial properties, and you'll also have access to private one-on-one email-based career coaching if you're looking to break into a top real estate firm and want some personalized guided feedback along the way. And if you like this video and want to see more content on this channel on the current state of different real estate markets, make sure to hit the like button to let me know, and let me know in the comments which markets you like most heading into the new year. As always, thanks so much for watching, guys. I hope you found this helpful. Subscribe to the channel if you haven't already to see more videos like this every single week, and I'll see you in the next video.